Hi everyone, my name is Bassem and today we're going to be talking about investing in the stock market. I'll briefly go over what is a stock, what is the stock market, why you should invest, how to invest, and then we'll actually buy a stock together on Questrade. I'm going to be keeping it simple today. We're going to be focusing on the stocks of a company only. No bonds, no ETFs. We'll save those for another video. Before we get started, if you're enjoying the video, please like and subscribe to the channel, and finally, let's get into it. First, what is a stock? A stock or a share is an investment that entitles you to a portion of a company's assets and earnings. It means you're a part owner. So if you buy a share in Apple, it means you are an owner of Apple. Not the owner, but an owner. Being part owner of a company, it entitles you to vote in the affairs of the business. Every year I get about 40 or so notifications from companies that I've invested in to attend their annual general meeting to vote on the affairs of the business. And being I only have a few shares in every company, I gladly waive that right. Keep in mind, everything we do is electronic now. The transactions we do and the shares we own are all recorded electronically. Paper shares have gone by the wayside. Now, what is the stock market? Technically, it should be what are the stock markets because there are more than one. There is more than one. Just to name a few, Toronto Stock Exchange, New York Stock Exchange, London Stock Exchange, S&P 500, NASDAQ, and the list goes on. The stock market is an auction house. To me, it's a purely online auction house where usually I'm the buyer. Let's say I place a bid on the share of Google for $1,000. If I come back at the end of the day and I see that I still have that $1,000 in my account, it means a seller wasn't willing to sell at the $1,000 at my bid price. Either I need to come up in price or the seller needs to come down. On the flip side, let's say that I'm a seller. I have shares that I've placed a sell order for. If you invest in a company that nobody has ever heard of, there's no activity, or it's a penny stock, there's a chance that you can't sell those shares. Because it's an auction house, it's a market, there needs to be a buyer to buy your shares that you're trying to sell. You can't just divest whenever you want. Because it's a market, there needs to be buyers and sellers. Now, why you should invest in the stock market. Personally, I think it's a great and relatively easy way to earn income and build equity over the long term. Note that I'm specifically outlining and mentioning long term. It's great for the patient investor, it's great for the frequent investor. By that I mean investing some money every month, every quarter, or if you can't, at least invest annually. So now you know what a stock is, you know what the stock market is. We need to set you up with an account to trade with. So you need to have an account with a brokerage. You can get it at any bank, or you can look up some discount brokerages like Questrade or Wealthsimple. Personally, I went with Questrade because of their low transaction fees, usually $4.95 every time you sell or buy. If you're trying to decide what type of account to buy, because usually the brokerages and banks offer many options, let's keep it simple for now. Let's do a self-directed trading account or a self-directed margin account. This means you'll be the one making all the decisions, no robo-advisors. Although I'm going to be making another video after this on advice for new investors, a quick note, I would avoid penny stocks. It's an easy way to burn through hundreds, if not thousands of dollars. You've probably heard of stories of people making money overnight, but chances are it's not going to be you or I. I would stick with companies with a proven track record. Take a look at Google or Apple over the last 10 years. Take a look at their earnings, their projections, or if they pay dividends or not. If you don't have the time to do the research, or you aren't financially savvy or trust your own opinion yet, there are actually plenty of websites you can look up that actually do the research for you. Now I'm going to be taking you to my Questrade account where I'll buy a share live in front of you. The problem is the stock market is closed. It won't actually be filled, but at least you'll see the mechanics of how to place an order and how to buy a share. Now I'm going to show you how to buy a stock on Questrade. Here is a summary of my account. You see I have my margin account, which is self-directed, and I have my TFSA. What you'll notice is the minus $2,000 here. What's bad about Questrade, like a negative, is sometimes it takes a day, 1 business day or 2 business days to transfer money over. So I really wanted to buy some shares and I didn't want to wait. So I ended up buying the shares, went negative, and my money will come in hopefully. Right now is the weekend, so hopefully it'll come in on Monday or Tuesday. But they'll charge me interest for these 1 or 2 days, let's say 3 days that I have this negative balance. So over here you'll see my cash balance or the market value of my account, and here's my total equity. We'll get into this later on. Let's go right now to the trading section. This is just a summary. We'll go to the trading area. It takes you to a different section. Computer's a little slow. Over here you can toggle between the different accounts you have, your margin and your TFSA. So let's go here. Let's go TFSA. I'm going to show you how to buy an Apple stock. So first, if you're like, I don't even know what the ticker is. Let's go to Google and let's go Apple stock, enter. Over here, you see exactly all the information given to you. This is the stock ticker. The ticker is how you'll buy the share. You can't just type in Apple. You have to type AAPL. Here it's telling you it's $324 US dollars as at February 14th. Here it gives you some more information. The 52-week high, the 52-week low. As you can see, this is almost double in 1 year, and it gives you the dividend yield. This means in 1 year, if you buy at $324, if you buy right now, you'll get dividends of about 1%, which is not the best. It'll half cover your inflation, but you buy an Apple share for this. Take a look at this chart. From 1 year, 90%. Let's do 5 years. 150%, almost 151%. Let's check out another one. Let's say Google stock. It appeared before we pressed enter. So here you'll see the ticker. It's on the NASDAQ stock exchange. You'll see the ticker. It is GOOGL. And yes, this means it is 1,518 US dollars for 1 share. If we go down here, you see it's up 50% in 1 year. It has no dividend yield. That means they do not pay you anything. This is purely capital appreciation. Let's take a look at the 5 year, just for reference. Look at this. 180% just holding for 5 years. All right, let's take a look at another one. TD Bank stock, a cheaper one, much cheaper. Thank you. So this is on the Toronto Stock Exchange. The ticker is simply TD. It is $75 a share, Canadian dollars. Let's take a look down here. Not much increase over 1 year, but they do pay a higher yield. This company pays quarterly, so you'll get paid 3.93% if you buy today, and they pay this quarterly, so approximately 0.95%. Let's take a look at the 5 years. What kind of return would we get? See, not bad capital appreciation, not bad at all. 39.5%, but this should be mainly in it for this dividend yield. So let's go back to Questrade. So we're in the trading section. You click over here. We go TD Bank. TD, this is on the New York Stock Exchange. If you notice, let's take a look here. See here, TD. Let's go TD.TO, Toronto Dominion Bank on the TSX, Toronto Stock Exchange. Quantity, how much do we want? We want to buy 1 share. Now here we need to make another decision. Are we limit or market? Let's not focus on anything else. Let's just do limit or market. Market means you will buy the share at the ask price. This is what they are selling the stock for. If you look at bid, this is, let's say, the last person that people are willing, the last person that put an offer on this price. They want, what is it, a 4-cent discount, and they're asking 48 shares. So if you buy market, you're gonna buy at 7.30, but you can also limit. You put over here the limit price, 75.29, let's say. Duration, how long do you want this order to stand for? The day until it's filled? Let's go day. At the end of the day, if this order isn't filled, then it will automatically cancel. One share, we're leaving the price at $7.29 for the day. Let's click buy. It'll take you one last time to this little confirmation page to send you all the information. You're buying in your TFSA, one share, the commission is $4.95. This is how much your buying power, your cash will go down. And then you'll send the order or do not send. Let's actually change this to the margin. Buy. This is my new buying power. This is how much it is going down. Send order. Now we go over here, orders. Let's see for the day. There's our order. Stop price, fill price. Now the issue is, like, you'll go under executions. You have no executions. This is because your order wasn't filled. That means because the stock market is closed, they're not able to buy. No one's able to sell, actually. So if we go executions, no executions, I should be able to cancel this somehow. There we go. You click on it, you can modify. Over here, you can say, no, I want to pay $75. You can rebuy, you can cancel. Let's go back in. We can cancel order, cancel all TD orders, cancel this order. Let's cancel this order. Are you sure you want to cancel your order? Yes. Now, if we want to sell, order cancel, it's giving me a confirmation right here. If you want to sell, let's take a look. We go under position, something we already own. What do we already own? We own a bunch of nonsense. Let's double click on the BMO, buy, sell. It tells me how many shares I have, 35 shares. Let's click over here. It automatically fills in my amount. So here, the same thing, you can limit the amount you sell at, or you can set it to market. So whatever people are willing to pay, I really don't recommend that. I recommend setting in the price you want. Let's match what they're doing over here, and let's click sell. Again, it gives you a confirmation. This is how much you're selling. This is how much you would get, 3,500. I wish it was 35,000. This is my commission, $5. Send order, do not send. Let's go, do not send. All right, I think there you have it. That's how you buy a share. That's how you sell a share. My next video, I will be going over just advice on beginners for investing. And then maybe going forward, we'll talk about dividends, we'll talk about passive investing, and we'll talk about multiple sources of income. Thank you very much, and tune into my next video where I talk about some advice. Thank you, and I'll see you again.